Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Tuesday, October 20th, 2015, and this is the daily report for gold and silver and precious metals across the board. Speaking about precious metals across the board, we do have that complex higher today, higher by about 0.5%. First to gold, as you can see, we're trading at 76.60. That's off of a low of 67.63 and a high of 11.80.86. Silver also making a nice showing on the day, trading up about 0.75% or 11% higher, just shy of $16. That's off of a high of 15.97, so we're about 6 cents, 5 cents off the high, and a low of 76. We'll look at silver and some specific studies towards the end of the show. First, let's take a look at gold. Daily chart, basic candlesticks, and I've just actually adjusted our fib retracement because when I looked at where our current low is coming in at, right in here, just at about 66, and then mapped it to the fib retracement. And the fib retracement that I had was looking at this low at 79, taking it up to this high at 92, and then looking at the various levels that come in. What I found is that it really didn't match up well. It was above this top here, below these tops, and I didn't really see any kind of a high correlation. So just to see how it would affect, I moved our lower end of the fib retracement from this low here to these series of lows right in here, figuring they might have more weight because of the amount or frequency that we hit those price. Lo and behold, when I do that, we do get a 23% at 65. Let's kind of draw this over here. We can see that there's no doubt we get a good correlation between this former high at around 70 and really not anything at all when we look at this high here at around 56. The question is, have we found some real support in the market? Because if we have, then my sense is that what we're looking at are nice rallies that are surrounded or are preceded by very, very short and shallow retracements. And here's what I mean. We take a look at this market. We get a huge spike up, takes us to 1140. The following day, it comes back down and it tests 1130, not too much, but then spikes up again and makes a new high. From there, we get two corrective days right in here, once again, taking us to a higher high, which is 1135, and then it's off to the races because we had this dramatic rally that came in, took us to a new high at around 92. We noticed the doji come in. We said we might see some weakness. Then on Friday, of course, of last week, we saw the market actually form what I believe to be a variation off of a three-river evening star, and that's these three candles right in here. And then following that, of course, yesterday's activity, we saw this marketplace open and then close lower on the day, and that's right here. However, we've got a couple of things that are noteworthy today. One, we definitely have some equal lows. It is either called tweezer bottoms, tower bottoms, but really tower bottoms, you would need many more candles than this to get a tower. This would be a tower bottom right here, in which you've got some large candles, and those are really engulfing a bunch of lows that are sitting at roughly the same place, and that's where you get a tower bottom. This is really a tweezer bottom, which simply means equal lows. Small size candles, $6 gain, $6 drawdown. It does look like an engulfing bullish, and therefore on an engulfing bullish, what we would look for is a confirming candle to take the call. A confirming candle for this candlestick pattern would simply be that on the following day, meaning tomorrow, we would get a green candle, a large green candle, the bigger the better, with a higher high and a higher low. And so if we met this criteria right in here for the engulfing bullish, it would actually confirm right here. And that would get us back into the market and back into the market from the long side. Now, traders, I'm giving some serious consideration to silver. We didn't trade it over the last couple of trades, but I certainly see that that market has found some real headwind. It's really begun to move to the upside. It has effectively broken above what I consider to be a real major resistance, former resistance at this point, but a resistance area nonetheless. And that particular area comes in roughly at around 1550. If we draw our line across, you can see you've got a series of real bodies right in here, not the lows, and you get that volatility with silver. Here you have these real bodies falling just above, again, just above, And then here it's a resistance area, resistance. And then when we get our breakout, of course, I believe this is when it becomes support. So we have support at 1550. On a weekly basis, unlike gold, it hasn't gone positive yet. And that's our weekly look, and it's only Tuesday. When we look at our daily, we can really see that the support level now in the marketplace is really at around the 60 or 70 level. And I'm just simply looking at a daily chart and looking at where these daily charts, the lows fall in, meaning if it's a red candle where it closes, if it's a green candle where it opens. And you can see there's a majority of real bodies that fall just above this line. We also, and this is at 1550 point, we've got really strong support in this area. So if we can see this market hold, we get signs that the precious metals are in fact going to take off. We know that as long as it trades above a certain particular point, meaning 1550, 1560, we should have good protection, and that's where we would place our stops. And lastly, I just want to revisit our weekly chart in gold, because I've got the 200-day, of course, I've put this in as weeks, I believe 29 weeks, but we're corresponding to a 200-day moving average. We're well above that. We also have a shorter-term moving average. That's the red line. And lo and behold, it does appear as though we're just at a point, not that they've crossed yet, but are about to cross right in here. So weekly chart, we've still got the doji, which means that we haven't gone positive nor negative on the week. Again, it's only Tuesday, but we're well above a longer term moving average. We've got the shorter term looking as though it wants to cross above there. So traders, this could be a really good entry point. As I said, we'll have to see if we get follow through in the overseas sessions tonight, into New York tomorrow, and then act accordingly. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Wednesday for another daily update review. Bye-bye.